Hello, everyone, and welcome back to the Traders Mind Chat live show. Now, today we're going to be talking about IPOs. IPOs, those are fun, right? I mean, IPOs, not only are they fun and exciting, but they can make you a truckload of money if you happen to pick the right one. Now, the problem with IPOs is that most of them are complete duds. Most of them never trade higher than their IPO price. So, how do you go about finding these diamonds in the rough? Well, that's going to be the topic that we're going to discuss today. Now, before we get into all that, if you wouldn't mind hitting that like button and dropping a comment into the chat, let us know where you're talking from. That is going to help blast this out to a lot more people. So if you could do that right now, I truly appreciate it. Thank you, guys. You guys are the best. Now, some of what we're going to be discussing on today's live stream are the fundamental qualities to look for in a recent IPO. We'll go through some of the technical qualities to look for in a recent IPO. We'll look at the patterns and the types of setups that you're going to want to look for in IPOs, and also discuss the option strategies that you may want to use for trading IPOs. So let me go ahead and share my screen and we will jump right in. I see Ryan's on. Welcome back to the live stream, Ryan. Okay, so actually, rather than have my face over here, I'm just going to click this button and make this screen a little bit bigger. Perfect. So first, let's talk about some of the fundamental qualities to look for in a recent IPO. So, how we go about finding these IPOs in the beginning. I'm running a couple of screens and I have MarketSmith open. MarketSmith is my screening software of choice, and you could really set up these types of screens in other software too. Like you could use some free software a lot, like FinViz. FinViz is fantastic. MarketSmith is a little bit more advanced and dynamic and how they display things. So that's why I like to use them. But you could certainly go ahead and use some of the free stuff that's available. So with MarketSmith, one of the things that I like to screen for is you see these two screens here, right? So there's IPOs with earnings and IPOs with sales. Now, the reason why I want to look for IPOs that already have earnings and already have sales is because it gives more reason for the bigger players, the major institutions, to be interested in them. And it also helps to dramatically narrow the field too. So let me show you exactly what it is that I'm screening for in this one here, IPOs with earnings. So I'm clicking up that edit button, and you can see over here, right? So in the database, there's about 9,000 stocks, right? And so just the first criteria here that the trailing 4 quarters have to have some kind of earnings, right? I'm only interested in earnings at this point. That narrows down the field from 9,000 to about 3,500. That is pretty insane that to just have earnings for the last 4 quarters. Yeah, you're talking already about the top third of the market. Great. So after that, you want to make sure that the last 4 quarters of the prior year have earnings too. Great. So that's narrowing it down a bit further. Now that we're looking at stocks that have earnings, then I want to say, okay, what stocks have had an IPO date within the past 1 to 2 years? Right. And so what that gives us is it's narrowing the field down even more. Now it's only 140 stocks out of about 3,000. Right. So yeah, well, what is that? About 0.5%? Not much at all. And then you narrow the field down even more. Then I'm starting to look at stocks with a current price of at least $5. Now, you'll be able to find more IPOs if you are saying, "Oh, I want to trade penny stocks or a dollar." But the major institutions, the ones that are really going to be getting in and moving these stocks, most of them are going to be trading above $5. So for me, that's why that tends to be my cutoff. Now, this here, the 50-day moving average volume, I'm actually going to bump this up. I thought that I had already, but still looks like it's set at 100. So what I want to do is I want to take this and say, let's make it 200. Tighten that up a little bit more, right? And then let's see the results. Yeah, it cut off a few, right? Not too many more, but it cut off a few. Now there's 69 results. And then, and part of the reason for that too is that if you are that you certainly can trade stocks that are thinly traded. The reason why my personal preference is to trade stocks that aren't as thinly traded, at least not super thin. Like when trading 100,000 shares per day, I consider to be super thin. The reason why is because the bid and the ask starts to get super wide at that level. And some of the price action tends to be pretty erratic. You start to see a lot of gaps in both directions. It makes it a bit harder to trade. So I'd rather just steer clear from as much of that as I can. And one of the ways to do that is by trading stocks that have a little bit higher volume. So next up is the group rank. I want to trade stocks that are in the top 100 industry groups. In MarketSmith, there's 197 industry groups. I'd rather just stick to the top 100 because it's the stocks that are in those higher industry groups, the industry groups that are performing well, those are going to be the ones that tend to move. You may have heard the term "birds of feather flock together," right? Like it's true with birds, it's true with stocks, and uh, you'll be more likely to pick a winner if it's also part of a winning group. So, um, some of the examples of stocks that are passing the screen right now, right? So let's go through some of them here. Yeah, so view screen results. It should open right up there. There it goes. Yeah, so right here, yeah, you can see that the earnings are through the roof right here, right? Like 900% quarter over quarter over quarter, and it's done that for the past 4 quarters. This is one that is currently on my radar. It's in my universe list. So far, it hasn't materialized. It hasn't presented an entry point yet, but it's still a name that I want to keep on my radar. Now, here's one that has been on the radar that was on our focus list, and some of our members have been in and kicking ass in, frankly, AKA brands. So you can see here too, right, where you have the earnings have been triple digits quarter over quarter. One bad quarter in there, so it's interesting that it passed this. Oh, you know why? It's not looking at the percentage change that screen, it's looking at the actual earnings. It's looking at the actual earnings, and for the actual earnings, it does have actual earnings. It's just comparing this quarter, June 21, to last quarter, June 21, and that's why it's the same there. But for now, earnings are kicking ass, and uh, yeah, this came on the radar way down here. So not a bad return in what from October 15th to uh, up here, mid-November. And not bad at all. This is a great example of why you want to try to find great IPOs and put great IPOs on your radar. These screens are really a great way to do that. So um, hopefully you took some notes in the beginning. If not, this replay is available immediately. So go ahead and rewind it, and you could get the exact things to screen for. But yeah, the lots of great examples in here too. Right, like here's Allegro Microsystems. Actually, you know what? Why don't we also sort this by group rank, and we could see some of the top uh, group ranks here too. Now here's Upstart, right? Like so, Upstart ran from back here and eventually topped out, right? But Upstart has been on the radar and tradable back here. We traded it back over here. I held on a little bit too long in Upstart and ended up exiting part of the position on this gap down right here. Just to give you a little bit of insight into that. Don't want to deviate too far, but this is one that I saw as, or thought at the time, true market leader. Let me hold through earnings. I have a good cushion, and it did this. Now, when it gapped down, well, what I decided to do on the gap down day was I had a hard stop in the market around here. I took that stop off, right? No, so now we're talking a little bit advanced strategies here, advanced tactics. But I took that off so that way I would be able to not sell immediately when price gapped against me, but to give it time to rally intraday. And that's what happened. It price had gapped down, but it opened up higher than what it was pre-market. So instead of selling down here at the low at 239, the low of that pre-market was like maybe 235, if memory serves me correctly. But able to get out pretty close to where it had closed in the like high, like around like 250 or so, like somewhere in that ballpark right there. And you can see what happened after that. So uh, when they say that your first loss is often your best loss, yeah, it applies here too. Anyhow, um, by the way, let me know if you guys have any questions yet. Any questions, go ahead, type them into the chat. We'll continue to with some of the, so we talked about earnings. Let's talk about sales. Go through this sales screener. And let's open this. Now, well, with this here, well, what I'm screening for, very similar stuff, right? Well, we're taking we're looking at starting with 9,000 stocks. We are narrowing it down to ones that have IPO'd well, within the past 2 years. So that's taking the list down to 640. Current price, $5 or better. Current average daily volume, 200,000 shares per day. Great. Group rank at least 100. And then over here, this is where the magic happens. We want to have sales be positive, right? So sales of at least 1% or more for last quarter, sales of at least 1% or more for the quarter before it, right? So it's not just making sales, it has a little tiny bit of a history of making sales. And then to narrow it down further, right? Because that's still 172 stocks. That's still a lot. To take a look at, well, are sales accelerating for the last 2 quarters, right? So uh, even if the prior quarter, right, that third quarter going back, even if that's negative, to start to see progress over time, that's very helpful too. And that narrows the field down. Now we've got a nice tight list of 49 stocks. So let's come over here and sort this list and take a look at some of these. All right, so we sorted that way, and let's also sort it again by group rank too. So we've got the top groups up here at the top. go through some of these names here. All right, so CFLT, right? Like what a move this has had. This has been on the radar for quite a while. Nice cup with handle over here. Breaks out of that. Has its run. Here's yeah, Centalone, and the big one. Let's see. Glimpse is still materializing. Let's see if there's some recognizable names on here. Yeah, that you guys might know. Probably know Asan, right? Asan has been out for a little while. Um, was on the radar back here, over here, and still passes the screen too, right? So it's not where if you miss and this is why I like to have the IPO be recent IPO within the past 2 years. So that way, like let's say Asan was the group rank was 150. Well, when it came out, right, and so it doesn't pass the screen. Well, later on, it's able to pass the screens and then still come onto this list, and it's still tradable, even in here, right? Like so, let's say it first pops onto the list over here, right, and you're like, oh man, I missed it. Well, you take it, you put it onto a universe list, right? And we've spoken about universe lists before. If you missed that conversation, go back and rewatch some of the other live streams on the channel. But you keep that on your universe list, and then each week you just go week by week, and you see it materialize, and then you start to say, "Oh, hey, look at this!" Right? It's moving flat over here, right? Like maybe this is forming a high tight flag, and then you start to drill down into some of the other time frames, and then you say, "Hey, look at this!" Right? Look how nice and tight that is. Maybe this is actionable. Maybe I'll place an order for this, and then you have such a strong IPO that's shown that it's a leader. And you have your opportunity to get in at a very, very good reward to risk right in there. So those are the basic fundamentals that I'm looking for in an IPO. The earnings and the sales wanted to have those main things. There's other things too that I'll evaluate all stocks by, but for recent IPOs, that's basically it. Give me earnings, give me sales, and if it has both of them, even better. Any questions on any of that? Any questions? Alrighty, then let's talk about the technical qualities to look for in a recent IPO. Right, so we already started to talk about some of them too, right? Like you see here with Asan, when did Asan IPO? Asan IPO'd. Come over here to the weekly time frame. IPO'd October of last year, right? So there's even a buy point later on over here, right? Well, what is that? That's nearly a year later, so you can look at it that way. But let's look at a more recent IPO. Let's see, what was, I think we saw some on this other screen over here that was like really, really recent. Um, Yeah, you know what? I was just in Coin, exited Coin recently too. So let's talk about Coin, right? So here's your classic case of an IPO, right? So IPO first week. Actually, why don't we look at this here, right? And yeah, here's another great point too. So Coin, spectacular run, still has not gotten past its IPO price, right? The high of the IPO day was 430. On this run, the high was 368. Anyhow, this is why for IPOs, you really don't want to be trading on day one. Most of the time, IPOs do this on day one. Right? Like They trade and then they never get past that IPO high, and you tend to see a little bit of a sell-off like this. Sometimes it's like this. Sometimes the consolidation period is a lot briefer. But generally speaking, you don't want to just be trading IPOs on day one. Uh, and part of the reason too is that you don't have much of a way to gauge reward to risk at that point. If you are trading and using a chart like I'm doing here, the way that you want to try to define reward to risk, let me reset this, is to say, okay, where is price structure, right? So if price, say, gets above this high over here, right? And that's where I bought. I bought on that breakout right there. So if that happens, where am I getting out? Right? So I would exit at the low of that day, a little bit of a gap up right there. And so I'm basically playing the gap, uh, buying at the high, selling at the low. You want to wait for these consolidations to happen so that way you have a very clear spot of where to enter and where to exit if price moves against you. That's true for any trade, IPOs included. Now, with this, right? Like, so what did it do? It started a downtrend. It consolidated a little bit, right? So for those of you that are familiar with stage analysis, right, well, like perhaps you are, maybe you're not. Let me know in the comments. But there's a stage analysis that Stan Weinstein, he's the first guy that really started to talk about stage analysis in this way, where this is a stage 4 decline, then you have stage 1 where price is moving sideways. Then you're moving into potential stage 2 over here, but it really just continues to um, move sideways over here. And so it's at this point that you're starting to move into stage 2 uptrend, right? But part of what looking at over here too is you have this initial decline, and that this will be true for CanSlim followers too, right? For those of you that are familiar with William O'Neill, you have your initial decline, then you have your basing period down here, then you have your run up of about 20% or so, probably a little bit more, and then you have your pattern right over here, right? And so let me reset this again. And I'll draw this out because what this is over here, if the little pen decides to work, and I guess not, but you have a little bit of a double bottom right in there. Yeah, you have a double bottom in there. And you know what? To draw it out even better, let me bring over Trading View, because Trading View is uh, significantly better when it comes to drawing patterns. All right, so just reset my drawings here. Got the same chart. And there's your double bottom. There's a tiny little handle right there. And then over here is uh, where I'm buying. When it broke out of that and it's breaking above this too, and I'm using this uh, down here as my stop loss. But yeah, basically, uh, the technical qualities that you're looking for: basing period, run up, consolidation again, and then buying that next follow through. That's some of it. Um, some other examples, right? So the recent example, Airbnb, right? Airbnb too was, if we come back and start to look at it right over here, right? Basing period, shorter basing period, right in that area. In fact, let me put Airbnb on TradingView too. Right, so bring this back down. So you have this move, which is pretty hard to trade out. Like those U-shaped bases, like if you're looking at that as a U-shaped base or a V-shaped base, or are you looking at that as a cup? To me, those are one of the most difficult ones to trade because it's difficult to define your reward to risk, right? Like where are you going to place your stop on this trade? It's a little bit more challenging, but after this runs up and breaks above the IPO, right? So that only took what? That only took a few days. Great. So now it's consolidating again. And what you could see here too, yes, it's forming another cup, but it's having a larger sideways consolidation down here at the bottom. This is tradable right in this area here, right in this area right there. So the same types of patterns that you would typically look for, your cups with handles, the bottoms, all that kind of stuff, they show up in IPOs. You just need to give it a little bit of time for them to develop. What's a little bit of time? At least a week or two, right? Like some of these patterns are developing very, very quickly, right? Like so, Airbnb IPO'd on the 10th of December last year, and it was breaking out to new highs. How many days is that? That is 7 days later, 7 trading days later, right? So a week and a half. And then it becomes viable to me anyway, 21 days after the IPO. So about a month after. So the idea here is that you want to be screening for IPOs, putting the IPOs onto your watch lists, and then continuously monitoring those IPOs to see if and when they form these types of setups. Right? So technical qualities to look for, patterns and setups to look for. We kind of put those two together in one. Right, so eh, in the IPO, uh, you're looking for an uptrend. You're waiting for a consolidation to occur, and then you're buying that consolidation. Now, let's talk about some option strategies for IPOs. So, when you are considering option strategies for IPOs, the thing that can be a little bit challenging with options on an IPO is that oftentimes they don't have them. Right? Like sometimes you'll find options on IPOs, but it tends to be a little bit rare. So the first thing that you would need to do is to see if that IPO has options on it. And you can keep on going and checking. Often it'll take a little bit of time for them to gain uh, any kind of options contracts, but go back, check those stocks that you're interested in. And then after that, the same kind of rules apply to trading options for the IPO. If you want to have a liquid market for the options, right? So that here we go again with our is this a liquid name, right? Not all IPOs, right? Like remember, when we're screening for IPOs, the criteria, right? So to come back to the criteria, we're looking at 200,000 shares per day. That is not a lot. If I find a stock and it's only trading 200,000 shares per day, it is not going to have a liquid options market. Now, when we look at a stock like Coin or Airbnb, this is trading 2 million shares a day. And like that's how many it's traded so far today, and the day's not over yet. So that is the type of stock that will have a liquid options market. So you're more likely to find liquid options. You'll be able to enter and exit relatively easily. You won't have to deal with slippage of getting a bad fill on your order. That's challenging to have to deal with. You could be right on a move, but because of the illiquid nature of the contract, losing on the trade, right? So how do you deal with that? Make sure that the that the contracts that you're trading are liquid, that you see high volume for not just the stock, but also for the options contract, that the difference between the bid and the ask is relatively tight on the options contract. Relatively tight for me tends to be within the 10 to, I'd say, maybe about 30-cent range. I wouldn't want to give up more than that on an options contract. And I tend to use options as stock replacement strategy. So, for example, if I were to buy Coinbase, right, and let's say I'm buying this and I'm using options instead of shares, then what I'm buying it for is that leverage. So if I'm buying options and I'm using it as a stock replacement strategy, then that also means that I expect this to move relatively quickly. So I would want to be buying the options, right? And there's many different option strategies. I'm just sharing the option strategies that I would personally use. Uh, I would look at this and say that, oh, well, how far do I think price can move uh, given a bunch of different variables, right? So some of the variables might be uh, the length of the base, the power of the breakout, and you can see down here that volume was very heavy on this breakout. And this could have been a prime candidate to be trading options rather than the stock to give you that bit of extra leverage, because when you have this kind of volume on a breakout, you tend to have an even stronger move, and it's that velocity, that volatility, that's going to give you a stronger move in the price of the option versus the stock. So those are some of the option strategies that I would use in trading IPOs. So all that said, do we have any other questions for trading IPOs, how to find IPOs, technical qualities, anything that we've spoken about thus far, or any other questions that you guys have? Go ahead, pop it into the comments while I take a sip of water. Oh yeah, by the way, happy Thanksgiving to everybody that's here, that's watching. If you're watching later on, happy Thanksgiving to you guys too. It's such a great time to be alive. So much gratitude for so many different things. Appreciate you guys, appreciate life, family, being able to do this every single week, multiple times a week. It really is amazing. Here, YouTube, ShareVision. ShareVision is a great platform. If you haven't checked them out, definitely check out sharevision.com. They're trying to build a niche of finance and finance live streams over there. Right, so trying to do what Twitch did for gamers, uh, they're trying to do that for people that are interested in trading. So go check out sharevision.com. Um, yeah, other than that, doesn't look like we have any questions coming in. So I want to say thank you all so much for joining me today. I truly appreciate it. And I'll see you back here next time for whatever topics you guys are interested in. Comment down below. Let me know what you want to see next. Take care. Much love. Peace out. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.